Okay, hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, January 6th. Michael Boutros here with you guys. Good to be with you this morning. Lots to talk about. You might have noticed yesterday's update was a little bit lengthy. We also had a couple of charts on the radar charts, which we have in view. Mostly, it's been an Aussie extravaganza on my part. Aussie Dollar, Aussie Yen, Aussie Kiwi we looked at yesterday. We'll take another peek at that, although not quite as appealing, but certainly heading into non-farm payrolls on Friday, we do have a lot of stuff to look at. So let's just jump right in. As always, guys, feel free to throw any questions, trade setups that you want to review. Eileen, great to see you back in the room. Says, good morning, Michael. Happy New Year. Hope you made it back from your skiing all in one piece. Actually, Eileen, I'm just about to go. This weekend, we're heading up to Vermont. It's been a tough ski season on the Northeast. We haven't gotten much cold or snow for that matter. So hoping to kick off the season this weekend. That said, great to see you in the room. Mark, great to see you as well. Hussein, Graham, Avery, Bernard, Christopher, we got the whole house. So before we get started, quick look at relative performance for the US dollar ahead of the open. You do see the dollar still stronger against all its major counterparts. Now we're coming into some pretty critical areas of resistance. You might have seen me post this chart yesterday on Twitter. It is also on yesterday's radar charts as well. Look, you're looking at the 2016 open, which is the weekly open. That came in at 12,193. More important, the high day close for 2015 and November comes in right at 12,204. That's what we need to close above. We've tried that. I noted this on the report yesterday on 10 separate occasions to try to make a break through this region. We haven't been able to do it on a closed basis. Momentum did get a trigger break. You got a beautiful rally. This is the 7th consecutive day of rallies. Momentum is eyeing 60. So on long dollar positions, guys, just ease it up here as we head obviously into the end of the week and non-farm payrolls. It is coming into an interesting area of resistance. If we clear through this, there's really not much to look at beyond 12,000. What was the targets? 12,219 is going to be the actual stretch high from November and 2015. And then you're basically looking at that 100% extension off the low, and that takes you to 12,250. To get on the bearish side of the trade, you really do need to clear back below that 618 retracement, and that's where the near-term 30-minute chart comes into play for the dollar. Here's what it looks like. So again, that key region, this was on yesterday's radar as well. We came right into it, the high day close. Again, you also have a trend line, basic trend line resistance off the highs right there. The bullish invalidation level you really need to clear is still all the way down here at 12,156, 12,160. So very hesitant to do anything as far as fresh new dollar long exposures here. We'll go over the crosses. You might have further opportunities in some of them. We're not going to blanket this statement against all dollar crosses, but certainly on its face value, the dollar index, Dow Jones FXCM dollar index, at its inception, equally weighted euro, Aussie, sterling, and yen, coming into an area of resistance here that we want to be mindful of. Also note that divergence in momentum has been occurring since the start of the week. Every subsequent peak that we put in the momentum oscillator has been either equal or lower as price action has continued to push into fresh highs. And again, this is something to take in note that you can get these divergent signals lasting for hours, days, even weeks before they break down, but certainly suggests that you're seeing the topside momentum starting to wane here. With the US dollar where it is, time to press a euro dollar long, says Mark. We'll take a look at it, Mark. I haven't actually highlighted that in the recent reports. Let me write that down. We'll definitely take a look at euro US dollar for sure. But it might be time. I mean, if there were a pair I'd like to press against it, I think that would be one of them. Just again, objectively looking at this point, looks like dollar should be teetering out here soon. As a disclaimer, I am holding a long position on Aussie Yen, and that's just a scalp off the lows here. We'll go over that as yesterday's update on the Aussie crosses. Before we move off, any questions on the dollar index? Looking at resistance at 12,204, the close today will be critical. And again, really can't overestimate the technical significance of this region here. Also, something just to take note of, I am not a big fan of how we've performed as far as this pitchfork in price action is concerned, but former lower median line parallel, which caught that low in early December, may offer some resistance here as well. All right. Okay, so let's jump right into the reports from last night. First things first, let's go over the update. First up on tap was the Aussie dollar, and certainly the Aussie's been one of our best performers this week, well, alongside all the Aussie crosses in general. But you know, that break below 71.78 really prompted this move lower. So last night you got some, again, weaker data from China PMI figures showing further weakness as far as the data is concerned out of that region, prompted some further sell-off and risk. Add to that, you got this report of North Korea apparently having successfully tested some sort of H-bomb or hydrogen bomb. Long story short, guys, these are all just headlines that we'll take into account, but it prompted the break of the next support barrier, which was 71.20. Next targets to the downside on that move in the Aussie dollar, you'd be looking for 70.94, which is a big confluence in price. Here's what the scalp looked like, followed by 70.65. Bigger region of support is down here at 70.37. Here's what Aussie dollar looks like now. Aussie dollar. Gary says, taking dollar into account, does that add to the downside risk for dollar yen? Absolutely. Absolutely. The only thing with dollar yen is I think it's going to be a little bit of a chop fest before you finally make the breakdown, just because I'm sure as you come into these levels, guys, there's going to be those bottom fishers that are going to try to call a low to this. And in fact, all that buying pressure may give you a nice rebound in price, but I think the damage has been done from a technical standpoint. You got to continue looking lower. So having said that, excuse me, even if we do rally as high as 119.50, 119.55, I still would be looking for possible short triggers on dollar yen. And we'll go over this again a little bit further in this session, Gary, if you have any questions on that. But back to the Aussie dollar. Here's what the updated daily chart looks like. Basic channel support. Okay, if you take the trendline resistance off the highs from December and the high that we made at the end of December there in the 31st, mirror that to the lows, a parallel gets you an exact tag of where we just bottomed out here in Aussie dollar. The low is actually 70.54 on the mark. Still got a little further to go in momentum, so continue favoring the downside. Here's the 30-minute looks like at this point. So there's that 70.65 level, which was our soft target from yesterday. There's that key 100% extension, and it comes in almost in line with the 786 off the lows. So that's 70.37 to 70.31. That'd be our next support target. The only thing I want to note here, guys, is that the momentum trigger that initially caused the break, or not caused, but confirmed the break, sub 70.94, we're back above that. And on the stretch on the downside here, I think we could see a little bit more of an upside. Long story short, we're going to go ahead and lower our bearish near-term invalidation level right here to that 100% extension at 71.20, where we were sitting at as support yesterday. That's going to be the new near-term bearish invalidation level. So immediately lower below this. The only thing that would shift the focus near-term back to the upside would be a break back above 71.58. At that point, you could start target these topside barriers towards the upper median line parallel. But as long as you stay below this region, you want to respect the directional bias here. Just give you a quick zoom out and give you a picture of where we are. Does that make sense? Mark says, it just dawned on me. Why are you short Aussie Yen? Nice. You're asking me, why am I short Aussie Yen? So I'm actually on the long side just here for our bounce off support. But the Aussie Yen bias since Monday has been to the short side, right? That has been a beautiful, beautiful trade. It's just that at this point, you've come into a near-term support target. I think could offer a nice bounce. We've been taking a lot of counter trend trades. Oh, he's saying why you aren't. It wasn't a question. LOL. Right. Okay, I got you, Mark. I read that wrong. Yeah, it's been a beautiful ride, both on the way down, and we've taken quite a few. We talked about them here in the webinars, quite a few counter trend trades on Aussie Yen. So we'll look at that next. Any questions on Aussie dollar before we move off? So again, you know, if we see a move lower, I'm not going to be jumping into any fresh Aussie shorts from down here. But if you're holding Aussie shorts, the major support barrier you'd be looking for if we continue lower here would be 70.31, 70.37. Keep in mind, again, on the daily chart, that basic trendline support. I could probably add that on the scalp chart here as well. All right. Raj, a quick reminder. Yeah, thanks for reminding me. Jamie is still ill, guys, so he's not going to be doing his webinar today. His voice is really not there. I spoke to him earlier. So he will be doing the intraday or the swing updates will be out today, Raj. The webinar for the midweek strategy webinar, we're going to push that till tomorrow, same time. So Jamie's webinar, guys, scheduled for tomorrow, midweek strategy webinar at 1 p.m. Eastern. The swing update will be out tonight. All right, so that's Aussie. Nice play. Continue to favor the downside, broadly speaking, while below that 100% extension at 71.20. Major key support a little bit lower, 70.31, 70.37. There's no more Aussie data. There's no more Chinese data for the end of the week. You're basically looking towards NFP specifically here on Aussie Dollar. Next up on tap, Pete, sure, sterling dollar. We'll definitely take a look at that. He said we didn't cover that yesterday. No problem, man. We'll definitely take a look at British pound, US dollar. Okay. Aussie yen. Look like this. Another beautiful trade has been taken out. Most of our targets. We're now coming to like the final major key target that you want to keep in mind. And again, this is the reasoning for the near-term long that we took on Aussie yen. The basic premise is this. You broke below this 40 barrier in momentum. The last 40 breaks you've seen have seen some pretty dramatic drop-offs in price for the Aussie yen. Here's what the daily chart looks like now. Okay, we came right into that key barrier of support. And for me, near term, this is what has me a little bit antsy on trying to continue favoring the downside immediately for Aussie yen. It's now taken out, what? Pretty much 2 to 3 targets that we were looking for. Here's what this scalp looks like. And here's where we were last night. So the basic support that we were looking at was 84.18. And I noted that we were getting some divergence in momentum. And this was a much more, let me take that back. I'm losing my train of thought here. The difference between this setup and the Aussie dollar setup was that this had a nice confluence region of support where Aussie was kind of just still drifting in no man's land here. Also keeping in mind the yen strength story. Long story short, you saw a nice bounce here, come right into the 87 or 84.70 barrier, and that's exactly where this thing teetered out. Former resistance, trigger break, or former support trigger break, now resistance and momentum. And there was a beautiful trigger here on a 5-minute chart that puts you right back on the short side here for Aussie yen. Initial targets, again, are going to be that same low, 84.18, 83.69 was the next target, and that's where we are again. Another confluence region of support. So you could see a little bounce here. I'm only looking for like a rally up towards like 84.815, I think is where my limit is at this point for 2/3 of the position. So we'll see if we can get that on a bounce here. But broader story remains bearish, still below 85.40, 85.47. That's basic channel resistance and that major key pivot that we broke earlier in the week, tested as resistance and moved off. Looking lower below here, a break of the 83.69 barrier, and you're looking for that 88.6 at 83.13. That was the final target from last night. So if we get a rally into U.S. trade and we get a decent support trigger to try to take another short, I'll take it up here. Immediately from this level, I think there is a risk for a little bit of a bounce higher here. Again, a pair that tends to be very risk sensitive. And one thing I just want to note is this, you got that headline coming out last night, really skidded markets pretty quick. You saw a lot of the Asian markets sell off pretty abruptly, not only on that China data, but also on this report of the Korean bond that went off. Long story short, markets closed well off their lows. So that panic isn't really there. If we see broader risk start to recover, at least bounce back a little bit, that should offer some more support here near term for the Aussie yen, but a pair that tends to be very risk sensitive. I don't think we've seen the end of yen buying, which would be bearish Aussie yen, but I do think you use this bounce here to get a nice entry on the short side higher up. Any questions on Aussie yen? And something that we always talk about, a descending channel break to the downside can oftentimes be the sharpest part of the move. So if this is going to be legit, it wouldn't be outside the realm of possibility to come back, check that channel support as resistance, then move off. So we'll see if we can get that bounce, giving us a little bit more of a play and a nicer entry on the shorts. Again, a quick reminder to anyone who's new to the room, feel free to take a snapshot of any of the charts you see here by clicking on that camera button in the top right-hand corner of your GoToWebinar screen. Okay, so that is Aussie dollar and Aussie yen. Next up on tap from last night was Kiwi yen. The least impressive of the three setups that were on the update, at least. This is still teetering out right around that support barrier, but I did want to highlight it just because we briefly talked about this earlier in the week. I highlighted it yesterday on a piece for Daily FX. And while it's not really my favorite scalp at the moment, I still do think there's a lot of potential there. So here's what Aussie Kiwi yen rather looks like on the daily chart first. And the basic premise for me was to see whether we're going to see this break at 78.90, a break below that level, specifically with the median line right there. And the 618 comes in beautifully in line with the September highs. Okay, and that comes in right around 77.80, 77.84. The downside targets are extremely clear. You had that trigger break, multi-month trigger break. We talked about that. A break of basic channel support, 4-point support touch, so really validated support level. And these confluence breaks really, it keeps the focus to the downside. At this point, just like Aussie yen, I think you're at risk for a little bit of a rebound here. Here's what it looks like in the 30. And here's what we looked like last night. So as I kind of noted, this is a little bit more of a near-term confluence. You could see a rebound towards 79.40, and that for me would have been a nice short entry if we got it. The upside push here didn't have much to it, and we're kind of just dilly-dallying here. Really no clear triggers in price, so I'm kind of disappointed. I woke up this morning to see nothing going on here. I still do think that you're at risk for a little bit of a pull higher before you move lower, but the long story is, I hate to say it, but you're in the trend until you're not. So as long as we're below this channel resistance, which is again now a 3-point touch, you want to kind of respect where you are on the trade and the end strength that you're seeing. The next major downside target is really 77.83, 77.80, big level. So let me just show you where this is. This is a confluence of the 2618, much more near term in price action. 2618 off of that late December high. And the 618 of the entire rally comes in 77.83, 77.81. So you have your bullish invalidation level or your bearish invalidation level up here. You have the next downside target if we do see a nice trigger break in momentum. And it looks like one is shaping up as we speak. So divergence into the lows, price action making a lower low, the oscillator making a higher low. No, that's not a thing. Let me just see if this turns out being anything interesting. Oh, okay. And actually, you do have a topside resistance trigger that you can also use too. So if you see that topside pop out, I really wouldn't want to do anything. Remember, when we look at these triggers and momentum, guys, this oscillator means nothing to me. I'm looking at what price is doing in reflection of what's going on here. So if this pops through the resistance trigger and price hasn't broken any resistance or any trend lines or anything from a technical standpoint, it means nothing. It's when the two happen together that's something that you want to pay attention to. So I do want to see if this pops through the near-term channel resistance and you get a trigger break after some divergence, look for a run towards that median line. As we noted last night for Kiwi Yen, near-term resistance 79.40. The bearish invalidation level is still going to be 80.10. Why 80.10? Clear pivot in price. But also, at this point, it's just a basic median line off the high. So if you break that median line, odds are you're going to go for a test of the upper median line. So we'll use this as our near-term bearish invalidation, immediately looking lower below this trend line. Key near-term support, 77.83, 77.80. Remember, a lot of these trades that I've been pushing in one direction all week long, guys, you reach an exhaustion point, and specifically towards the end of the week, volatility grows into the close of the week, right, on a typical week in FX. Now, you're heading into the first close of the week for the year, the month, the quarter, and it happens to be a non-farm payroll Friday. So just keep that in mind and make sure we're staying nimble here into Friday's print. Any yen pair, any dollar pair is going to be on the table as a possible setup, as you're likely to see some volatility. Expectations are still high, guys. If you look at non-farm payrolls, expectations are still for a print of 200,000. Unemployment expected to hold at 5%. We got ADP change today, and ADP employment for the U.S. coming in at 257,000. That topped expectations of 198. Okay, now if we take that into account with what's going on, it makes a very big dilemma for the Fed, because you have broader risk turning over, you have tons of event risk on the horizon as far as geopolitical risk with what's going on in Saudi, in Iran, now in Korea, China's slowdown, and all these external factors are going to make it much more difficult for the Fed to continue normalization. Now, if the data continues to come in at 200,000, 250 on unemployment or non-farm payrolls rather, and we see specifically inflation start to pick up, it's going to be very, very difficult for them not to hike. So either way you look at it, I do not fancy being Janet Yellen this year, and it should make some interesting trading opportunities. That being said, watch for non-farm payrolls on Friday. Should be a doozy. Hey Kyle, Sterling Swiss. Haven't looked at that in a while, but we'll take a look. Let me jot that down. And Avery on the Kiwi Yen saying, "Hi Mike, Kiwi Yen, where's your 100% fib retracement? The low in August or September? September. So for all of those retracements, guys, I used the September low. Why? The August 24th drop off, that massive sell off we saw in risk, those really emotional swing lows and swing highs, I tend not to fancy using major extensions retracements off of those levels. A lot of the times the low or the high that you'll see on the platform, depending on what trading, depending on what broker you're using, might be a little bit more based on the spread blowing out. There just wasn't enough price action taking place there, Avery, for me to really use that. So for all of those trades that you see, specifically Kiwi Yen and Aussie Yen, they're off the September low. He says, "Kate, got it. Thanks." Yeah, you're more than welcome, Avery. All right, so that is Kiwi Yen, and those are the three setups that were highlighted in yesterday's intraday update. Again, of the three, I'm more operating in Aussie Yen and Aussie Dollar. I think have been the ones that I've kind of been most interested in. So here's Aussie Yen making a move to the upside. Here's what the 5-minute looks like on it. Let me just bring that up. Here's what the 5-minute looks like on the Aussie Yen. So keep in mind that we're looking for about 29 pips on the scalp, or about 28 pips here now. So as soon as we get into that 29 pip, a couple more pips, we'll go ahead and we'll book a third, 2/3 of the trade. We don't want to get overly aggressive because we don't have validation of this low. All we know is that we've gotten some divergence into the low. You got a trigger break to the upside, specifically on the 5-minute chart, on the tag and hold of the 40 levels where I got in. So we'll be looking for that initial resistance just above the 84 handle for Aussie Yen. All right. And also, it's also prudent, guys, when you're in a trade like this, just take the most recent directional swing, tack on a quick retracement, and see what your first basic retracement of magnitude comes in. Okay, your 38.2 comes in at 85.35. Your 50% comes in basically at 85.90. So just to keep things in view, and a basic 236 would take you as high as 84.67. So if this does materialize into a little bit more of a concrete break, you know your targets. For me, I'll be looking to take off some at 84.15. If we get into the 84.67 level, even though my target's 84.70 here, most recent price action is dictating that I get a little bit more prudent and choke that up a little bit. And this is how we kind of just work through the positions. So hopefully that helps. To the radar charts. Here's what the radar charts look like from last night. Kiwi CAD, rallied as expected. One of the only reversal trades that I had the guts to kind of call yesterday, and it worked all right. But typically we don't want to get too gutsy on trying to get reversal trades underway. Here's what Kiwi CAD looks like. Eileen says, what's your MA line using on the 5-minute for the Aussie Yen? Oh, honestly, Eileen, I don't even pay attention to it. I think I was working with a strategy a couple of years ago that using momentum on near term 8 and a 34. You might see James Stanley on Daily FX use it. Not really a big fan of using momentum to guide trades any longer, but they can be pretty helpful just by looking at the slope. I really don't want to stress it, Eileen. It's just there for general guidance. But Gary's question here says, if the Fed does hike again soon, do I take it that would be bullish for the dollar? Because generally I was thinking the dollar would chill out for a little for the first quarter. I do agree with you, Gary. Here's the caveat, my friend. If we see risk continue to turn over, and you might have seen me post this chart yesterday on gold, and I was kind of being sarcastic, thumbing the market with everyone so bearish on gold. Gold's rallying alongside the dollar, guys. Believe it or not, it can happen, right? And what that indicates to me, Gary, is you're coming into a little bit more of a classic risk-off environment. When markets seem to perceive that there is a lot of headwind, a lot of risk, your go-to diversifications are typically long yen, long dollar, long gold. Back in the day, it used to be long Swissy as well, but we know that, ship really got messed up on January when the SNB pulled out the floor. But those are kind of your go-to. And you're seeing that manifested over the last couple of days. You're seeing yen strength, you're seeing dollar strength, you're seeing strength in gold. So if they do hike rates, yes, Gary, you would objectively think that the dollar would be well supported. My interpretation, if you get that kind of hike, is that you'll see a surge in the dollar. And I think that actually would be a nice opportunity to get back on the shorts. But Gary, we can sit here and postulate ifs, and if they do this, what we would do. At the end of the day, everything needs to be taken on its own merits, and we have to see where the market's at when they make that change. If the dollar is trading at a fresh high and they hike rates, you want to sell that spike. If the dollar is trading into support and they hike rates, you want to buy that. You know what I mean, Gary? So it really depends on where the market is positioned before. As I said earlier in the session, I think it's very, very difficult to justify them moving too aggressively on rates. With what's going on in the global environment and the geopolitical risks that are abroad, it's they don't want to make some waves in this kind of market. So, I mean, you saw Shanghai come back an overnight trade with a decent bounce here. But broadly speaking, most of the markets in Europe were lower on the session. or most of the markets in Asia were lower on the session. Here's what market performance looks like right now. So in Europe, most of the markets are down by almost 2%, 2%, excuse me. Asia Pacific, you saw that close in the red, well off the lows, except for China. Interesting, and believe what you want to, look what you want to into this, but broadly speaking, markets are turning over. And Eileen says, "Oh, I got you." Eileen says, "Okay, thanks." Gary says, "I totally agree. Thinking gold and yen going to be going to be good fun this year," and I completely agree with that, Gary. Everyone's looking for the dollar yen long because they kind of feel that they've missed out over the last couple of years. But this is not where you want to, in my opinion, this is not where you want to start looking for broader continuation of the uptrend on the horizon when you have such event risk. So take that for what it's worth. All right. So Kiwi CAD, finally, let's jump into that trade. Here's what it looks like. We were talking about the rebound last night. There it is. So we were talking about the rebound last night. It took out two of the support targets that we had noted. If you guys recall from Tuesday's update, this was a featured setup. Again, you can always click on the links if there's a hyperlink on the pair, guys, to go back to the previous report. But the downside targets that we were looking for back on the 4th at 93.62, 93.21. We were looking for a drop into this confluence region just below 93. Well, that's basically what you got. The low was actually 92.95. You saw a nice rebound here. Last night we had noted, look for this rebound to find some resistance at 93.63, and this is near-term bearish invalidation. So if you pop through this, I'd actually be looking to buy pullbacks up back towards 94.25, 94.30. Damn it, we did get a trigger break. So sorry about that. So I was actually looking for this trigger break too. It looks like we missed that one, but that was another opportunity right at resistance, right at that highlighted region from last night, looking for a trigger break to the downside. Again, near-term support still 93.20. Not really looking to play targets beyond this low at this point. I do think that if you hold this support, look for a launch through back towards resistance, just because on the daily charts, this is what we're looking at. Oops. This is what we're looking at. Former upper median line parallel for that formation off of last year's low as support comes in at 92.70. Okay, the low was 92.95. So I don't want to necessarily look to play a quick 20 pips there per se after a 6-day drop like this. So I'm a little bit more inclined to play that long into the resistance that we're out of already, so we don't want to touch the long side there. I'd be more looking to see if we see the top side break of this near-term formation and look to buy pullbacks towards this high. Let me say this. On the short side, if we break back below 93.20, you're likely to see a tag of this region. And this, just to put things in perspective, guys, nothing fancy. If we're looking at a basic retracement off the low, your most basic 236 comes in right in line with the 2618 off the high, 92.59, 92.60, 92.70. So we'll see. We're in the trend until we're not. Should be looking to sell rallies below 93.62, looking to target this major key level at this point. If we stay above the median line, you're looking at like into the close of the week. Actually, this is into the close of today. Sorry about that. Open of Asia tonight. A breach above this, and you're looking to play the long side. As a disclaimer, I have no positions here on Kiwi CAD, so looking for some fresh opportunities on that pair. Any questions on Kiwi CAD from last night? Again, a pair that was kind of screaming for the long here. You had some really radical divergence on the lows that you made, right? Price action made lower lows, the oscillator holding equal lows. right at trendline resistance or channel resistance. Okay, next up from last night was Sterling Kiwi. Another interesting one. I have it on the radar because I don't really have much of a conviction on it, and it is a super wide ATR. Here's the daily looks like. And the whole premise of the trade of why we're looking higher is because of this. Guys, we looked at this yesterday in the webinar. It shouldn't be a surprise to anyone. This 214.37, 216.01, huge region of support. My favorite confluences are going to be 100% off the high and a 618 off the low, or vice versa. On this specific retracement here, Eileen, or who was asking about this earlier, Avery, I am actually using the August 24th high. On this pair, let me just take a step back. When you're looking for extensions and retracements, guys, don't just tack them on blindly. If you look at a retracement and previous price action has offered a better support hold or a better resistance hold, work with it. Work with it. So when I looked at this retracement here, the 38.2 didn't catch anything major. The 236 didn't catch anything major. But when I tack it onto the highs, then you saw that that 50% retracement actually held for like 4-5 sessions. We dribbled right above it before breaking down. Here's the tag of the 618, a little bit deeper penetration. I'll allow that due to the fact that we are using a pretty stretched high. The 100% extension confluence just adds further validation. So Avery, does that make sense? I don't want to seem like we're playing both sides here. We got to take it on account of the actual setup. Whatever price action is saying, that's what we're going to work with. She says yes. All right, cool. Just wanted to make sure we're on the right page with that. So we're looking to play the rebound. You got a momentum divergence break here. Beautiful. And you're looking to play the upstretch. Now at this point, here's what it looks like on the scalp from last night. At this point, as I said, I want to be looking higher above 220. 219.50 is what I noted, and that was the basic opening range high for the week right here. So I kind of objectively want to be looking higher above this break. If this is the opening range, which you tested 3 times almost, we finally saw the break, you'd want to stay constructive above 219.50. That being said, I don't have much clarity to the structure of the advance. It looks like this slope is in play, but it's still too early to tell, which is why I have it on the radar charts. Broadly speaking, next near-term support resistance target rather would be 221.81, followed by that 38.2, a basic 38.2, and that takes into 223.18. So broadly speaking, I still like it higher above that 219.50 level. Much wider ATR. Okay, a quarter of the daily ATR, 65 pips. So not for the faint of heart. And certainly, if you're newer to this strategy, it might not be the first thing you want to dabble with. But for those of you who've been with me for a while, these are one of those juicy trades that when you get some clarity on the structure, delve in, definitely. It's never easy calling a low, but price action here, certainly near term, is suggestive. And where we are on the daily chart, rather, pretty nice region for us to actually make a nice rebound off of. Major key resistance, as I said, at 223.18 to 38.2. There's so much stacked up there. Besides the basic 38.2 of the decline off the November high, you have the 618 extension off the highs from September. So again, Avery, on this one, the September high is what coincided with price action and defined price much better. And you also have the 50% retracement of the entire advance, and that all confluences right here. So I expect some pullback from here, but broadly speaking, looking to buy Sterling Key above 219.50. Okay, and that's what I have on my notes for Sterling Key. Last but not least, and then we'll jump into your questions here, guys, would be the dollar we talked about. Let's take a quick look at gold. I just wanted to bring this to your attention because when you see prices moving in tandem that don't typically or against common, common belief of which they should always be moving inversely, here's gold, right? As the dollar is testing the 2016 highs, here's gold with a nice 4-day rally, popping through 50 for the first time since early October. You guys saw what happened in October. Oops. And then the time before that we popped through 50 was right here in mid-August. And obviously that saw another major substantial rally. Previous to that, from oversold conditions, was in early July or early August. And you saw what happened there. So using previous price action as an analog for these types of breaks can be very helpful. And I just wanted to bring your attention to these three targets. We're making our way through them all right now. 1079 is a 618 extension off of the lows. That's where we were trading last night. Okay, just below. 1078 is where we were trading. Next target was the high day close for December, and that came in at 1085. We just took that out. Next objective topside target is going to be the median line off the highs and the 100% extension. That's at 1092. Okay, so on a trade like this, you want to remain constructive near term while back above 1080. So the only thing that you don't see on this chart here is this. I added this on last night after I published it. I don't want to be too aggressive with this slope just yet because we don't have any major concrete tags of support or resistance, but it does suggest that you're seeing a confluence up here at that 1092 region with the median line later today. Any questions on gold? It's been under the table. I'm telling you, people aren't really paying attention to it because of everything that's going on, but it's been a slow creeper. And now on its face value, you're breaking. I'm speaking too soon. If we close today above 1085, it would be a break of the December range. And the December range was extremely well defined. You set a high and a low within the first 4 days of trading for December, and you spent the entire month in that range. When I see a month like that, guys, I like to use this range as an objective monthly opening range. So heading into this month, I was just looking for either a break above 1085 or a break below 1047. We'll see if we can get that today. All right. I see your questions filtering through. I'm paying attention. Let's take a quick look. I'm seeing a lot of questions on the euro. What's going on there? Let's take a look. So objectively, I've kind of been a little bit offbeat, or I haven't really paid much attention to the euro because I wanted to see the extent of this decline. So the 618 retracement of the advance off of the low you made in December, and basically the December range is what you're looking at here. It comes in at 107.23. You probed below it yesterday, but you closed well above that level. So at this point, it's still the support barrier to beat on a closed basis. Other than that, the daily chart really isn't saying much to me. I haven't really been too inclined to get too fancy here on the euro dollar. Here's what it looks like on the 30-minute. It looks like Mark's saying 30-minute and the hour have some RSI divergence. Let's take a look. So Mark, the 30 doesn't look like it has much divergence here, right? Remember, we're not looking at the wicks, guys. We're looking at the close. So I don't know if I'd interpret this as divergence. Price action is making, in fact, a higher high, and so is the oscillator. So I wouldn't necessarily stress that. Let's take a look at the hourly. Maybe it shows something different. Yeah, so same thing on the hourly, Mark. Just make sure that we're looking at the not the swing lows, but the close lows. That being said, it is at a very nice area of support. Like I said, that 618, guess where that 618 converges on. As I just said, my favorite setups. 100% extension off the high, 618 retracement off the low. Okay. Now, it just so happens, if you zoom out far enough, this operative trade or this operative structure that we were in, I don't know, 3 months, that upper median line parallel, which has been compromised many times, I get that, is kind of still converging on that region. Mark says, can you hold 1 second for a screenshot? Sure, Mark. Right here? So you can see, got it. Yeah, you're more than welcome, man. So you can see there is some cause for concern. I don't necessarily see divergence, but I would expect to see, if we're going to rebound, this is where you'd expect to see a rebound from. That's all I'm going to say. For me, a break above 107.61 would be the first mark. I'd be looking to target 107.90, 108.30. The near-term bearish invalidation level isn't until all the way up here at 108.90, which is kind of what has me a little bit more skittish on any short exposure from here, because I do think if it does break or it does make a move higher, there's room. There's room for recovery before you even start to challenge the operative downtrend. So keep that in mind. The level to beat today for euro dollar, very simply put, is a close below 107.24. Okay? If we continue to hold this above the close, I would expect to see a near-term rebound. Again, as you head into Friday, all bets are off. It's going to be based really on what we see in dollar price action on the dollar crosses. Why not a fib from the 1228 high? 1228 high. So you're talking about this fib, right? So that fib is going to be in play, Mark, once we have more concrete conviction that this is a low. Remember, if we just tack on fibs real quick when we don't have conviction of a low being in place, you run the risk of really starting to mess things up. I stand corrected here, actually, because this retracement needs to be adjusted to the new low. So I put these here just for reference. I don't know that this is going to be the low. So when I do these, really the only thing I'll look for is the 50 and the 618. Because if we break through this, then I'll be comfortable calling this a low, and at that point, I want to have that level in view. Does that make sense? But I'm not going to tack on this retracement and start working the highs until I know at least an opening range break to the upside. Because if we start doing that, then once we make this low, we tack on a retracement, it breaks the low. Now all of a sudden you're tacking on this retracement, it breaks the low, and you're kind of chasing a market. So let's get conviction of a near-term reversal here. Then once you break through this, you can start tacking on a 38.2, a 236, and kind of see where those come in. Make sense? He says, okay, I see, I got you. Thank you. You're more than welcome, man. Good questions. I'm sure there are a lot of people who have the same similar questions, guys, so feel free to throw them out there. But like I said, if there's going to be a reversal, this is where I love to see the reversals come off of. These confluence regions can be absolutely beautiful. I've been in my best trades over the years, 9 times out of 10. So that's the euro dollar. Any questions on the euro before we move off? I believe someone wanted to take a look at euro Aus. Did I see that? Who was that? Okay. I can't seem to find that question. If someone... Oh, Avery. Sorry, there's a lot of questions that come through. Me says Euro Aus and Euro CAD, please. Coming right up. So here's what Euro Aus looks like. Haven't really been too keen on getting involved there. Out of the Aussie crosses, this is sort of the one that's been I've been most timid on. Remember that trendline resistance or trigger resistance that we looked at yesterday? It looks like it's breaking here. We're not even that far above the opening range high for the week that we made on Monday. So I kind of still want to see what's going on here. Near term, I am looking higher if we kind of settle above 5160, 5148, this region right here. So if this support holds, I would like to see a move higher, just on account of a basic break of this formation, which seems to be one that's been in play, for a couple of weeks now. We dictated this as a false break earlier in the week, remember, on the breakdown. Here we are right back above that median line. So at this point, I'm a little bit more inclined to think this thing moves higher before we start to make any. Guesses here. It's not the most convincing. Yeah, it's too soon to work with this. I don't have much conviction on this, Avery. Just being honest with you, I think the kind of breakout region that you want to see give out would be up here at 52.40. Basically, that's the high that we made in that last week of December, or second to last week of December. It comes in with a basic trendline support, broken, tested as resistance. Again, comes at resistance up there. If it's going to be a basic 100% extension or just a basic equal legs up, you'd be looking at this level. You'd be looking at 52.90. If it's just going to be an interruption of this downtrend and a correction higher, 52.90 is where you'd still look for the stretch to reach. But objectively, so Avery, if I take a step back and I say, you know what, throw everything I think about the market right now out of the window, objectively, opening range for the week, failure to test the lows, break of the highs, objectively would be looking higher above this region. But it's just, on a break of the opening range, Avery, I want to see it run. I'm a little hesitant here. I'm a little hesitant here to give you guidance. Also, keep in mind that you're getting some divergence in price. This is true divergence, price action making a higher high on a closed basis, the oscillator making a lower high. And in fact, looks like even a trigger break just gave out not too long ago. So I'd be hesitant. Objectively constructive above 51.47, resistance 52.40, 52.90. Avery, does that help? Says Euro Aussie, given the breakout higher, I was wondering if you're still leaning towards a short bias. Yeah, I mean, at this point, I can't really advocate it. I can tell you that near-term momentum is waning, but as we looked at some of the setups earlier in the session, Avery, we can see momentum continue to show divergence for a day, 2, 3, 4. From a timing standpoint, gives us nothing, just tells us that the push is starting to get a little tired, and I think that's what you're seeing here in Euro Aus. Yes, I'm assuming you said you meant good to know your thoughts now, Avery, but thank you for that. I hope that helps. So that is Euro Aus and Euro Dollar. Okay, we had a question from someone on Sterling and Sterling Swiss. Let's take a look at that real quick. Here's what British pound versus the US dollar looks like. And I think this is one of the pairs I'll be looking at with great interest heading into Friday to see what the reaction looks like. I personally can't get too excited about further shorts on the pound. I know everyone's looking lower. I just can't get excited about it. It's a slow meltdown into some pretty critical support barriers. I just don't want to do anything with it right now. I think if you're really hell-bent on trading the sterling, some of the crosses look a little bit more appealing. It's just that for me, the pound is at such a critical juncture versus the dollar. I don't want to get caught on the wrong side. Here's what happens, or here's what I'm looking at, rather. You're looking at a basic trendline support off the lows from 2008 and the low that we made last year. So this trend line right here. We broke through it yesterday, and we are below it right now, okay? But it's the pound. This thing is notorious for sailing through resistance, sailing through support, and recovering right through. You can see it with this broader formation that we've been following for years. On every test of the formation, you see a push through and a reversal, push through and a reversal, push through and a reversal. So I don't know what to do down here. The dollar's kind of stretched. We talked about that earlier in the session. We're at resistance. A sliding parallel also seems to have caught some lows here in price on a closed basis. That's being tested right now. But momentum is sub 50, and as long as that holds, you continue to look lower. So kind of conflicting ideas brings my attention to the near-term chart with a slight continued downside bias, right? You're looking at this, stop traffic, you're still getting some divergence. Price action making a lower low, the oscillator making higher lows. Even when you got those trigger breaks as support, you see really pitiful follow through. If I'm trying to turn you off to the pound, it's just because I don't like it here. I can beat around the bush as much as I want, but I just, I think it turns at some point to make a rip and really rip some people's faces off on a rally before turning lower. But there's just no conviction for me to play this on a near-term standpoint. That's not price action for me. That's appealing from a scalping standpoint. So that's the pound. One other thing I do want to note real quick is that we are coming into a near-term support, and that's namely the 618 extension off the high that you made for August. So specifically on the August 24th rip to the upside, that first leg down within the confines of this formation gives you a 100% extension down here at 49.95, basically 146, which is basically what we tagged today. So feel free to take a snapshot of that chart. Those are the scalp levels I would be looking at if I were, or if I felt compelled to take a position here in sterling. Eileen says, ha, quote unquote, rip some people's faces off. That would be the pound. Hey, they don't call it a professionally traded market for no reason, right, Eileen? I know even when I was on the trade desk, we'd just be seeing some of these positions come through, and it can be a very, very tricky pair to trade, I'll tell you that. So for the pound, I'm much more interested in taking larger bites of it. So larger bites of the primary trend. So a major break of a range or a key resistance or key support reversal, you're not getting that here. You're kind of mellowly dropping through some major resistance. So I just don't know how much trust I put into that break yet. I would be interested in a short for sure, but I'd need some sort of substantiated recovery before doing that. So that's pound. Pound Swiss. I don't even know if I have a chart on that. Let's take a look. I do. Okay, so here's what pound Swiss looks like on the daily. And the only thing I can tell you about this is that we are coming into a very interesting area of resistance, former support, and a nice Fibonacci confluence of some major levels. You're looking at the 2618 from the decline off of that November high. You're looking at a basic 50% retracement of the entire. Whoop. Let me zoom out for this. There it is. Of the entire decline off the 2009 high. Okay. Right here. That 50% retracement has been such a critical pivot in price going back years, guys. 2012. Pivot. Instant support. 2013. Resistance. And here we are right back. Coincides nicely with that 2618. That coincides nicely with the median line off the high. And that coincides nicely with the 52-week, if I'm not mistaken, or the 200-day, rather, moving average. So there's a lot right here as resistance. If we pop through, we'd want to tack on a basic retracement here and play the topside levels. The one thing I do like here, you didn't get any divergence per se, but you are recovering back above 40 for the first time since back here. And while that did take a while, you ended up with a nice, decent rally into the September highs. So you could get a recovery. I wouldn't necessarily say I'm bullish the pair, but I would say that if you do pop above the 148 handle on a closed basis, you're likely to see a much more substantiated recovery before it turns over again. And again, in such a scenario, you'd want to just tack on a basic retracement. Hey, look where that 236 comes in. It's the exact high we made yesterday. All right, so watch resistance there. Pretty big in my eyes. Pretty big. So hope that helps on sterling Swiss. That was for you, Kyle. Does that make sense, man? I don't necessarily think I have a scalp chart for sterling Swiss, but we can always check it out. Ooh. Kyle says, yes, thanks, Mike. I've been holding along on it for 3 days. Nice, man. Nice. Watch that region. Watch this level here. I would, again, prudence pays. I don't want to tell you what to do on that position, Kyle. I'm not sure what your objective is on it. If it's a near-term trade strategy, I would be looking to shave some off here and bring your stops up a little bit, just because if this does hold, you're likely to see a pretty strong drop here on the back of this trend. But it does look like it wants to challenge it, and near-term price action does look like it's, putting in a near-term bottom here. So again, let me just work this real quick and see if I can work these levels for you. Okay. And again, this is going to get messy, guys. Just bear with me. Just to figure out where the near-term bullish invalidation level would be for Kyle here. Again, it's too early to really stress this, Kyle. I want to really just put that out there. But if I was trading and I was in your position holding this move, I'd essentially want to see a hold above, ideally the 38 too, but definitely the 50. So near term, I would say watch this. Stay constructive above 47.44. Not sure where your entry is, but if you break sub that level, which was a pivot in price last week and the previous week was the low, I'd get kind of concerned. So watch 47.44 as near-term support. A break above 48.27 and 48.80 would be a really nice zone. It wouldn't be necessarily a confluence unless it does it like over the next hour or so. But if that slope is in play, that's sort of what I'd be looking at is as far as sterling Swiss. So Kyle, again, hope that helps, and you're more than welcome, my friend. If gold breaks out, where is the target? Please, says Raj. So we looked at gold earlier in the session, Raj, but we'll take another look for you real quick, man. Here's what gold looks like on the daily chart. If you see a topside break of that key region of resistance, your next level up is that major key confluence 1101 into 1099. That is a 38.2 retracement of the decline off the October high. It's the low week close from last year. Here's what the weekly chart for gold looks like. So previous to the break that we made back in December at the very end, or July there last year, the low week close was right here. You tested it as support back on September 5th, or the week of. You tested it as resistance back on November 14th, or the week of, and that's your next level of resistance there. Okay, this is a weekly chart. And on the weekly chart, we highlighted this earlier at the end, towards the end of last year, serious divergence, right? Right into the lows and right into a key 618 extension off the highs. So off the late 2012 highs, that 618 extension came in at 1053. Again, only taking into account the closes, serious divergence. Saw that trigger break offer a nice rally earlier in the year. So here's another trigger break giving us yet another rally. Raj, does that help? Was hoping for 1164. Yeah, it might be a little too early to start targeting those levels. You know, again, for my purposes and our purposes here, Raj, we're much more near term. So I can tell you that 1092 level that we were talking about, boom, we're there. We are there. Near term resistance, 100% extension off the highs, off the lows rather, and the median line. So keep that in mind for gold. You might see a little bit more of an abrupt hold here, but the next level to the upside to keep in mind would still be 1098 into 1101. And that is not only the 38.2, not only that former low week close, but it's also the swing lows for September. And almost close to the October lows, not quite. But that's your next level. All right, it's looking good for gold, man. People didn't like that gold, that long call towards the end of the year, but here we are, nonetheless, back towards 1100. All right. Wow. We are well over time. I didn't even notice. Guys, we'll have to go ahead and wrap it up there. I will be with you tomorrow, same time, 8:30 Eastern. We'll give you an update later tonight. Again, just a quick reminder that Jamie's midweek strategy webinar will be held tomorrow at 1 p.m. We'll give him a little bit more recovery time and hope he's feeling better. So I appreciate all your comments. I will send over the best wishes, guys. Best of luck trading, and we'll see you tomorrow. Cheers.